Okay. I'm hoping you could hear me. According to the screen here, you should be hearing me. Oh, yeah, you're hearing me. Okay, I hear myself on my back up here. Okay, we're good. Happy Halloween, everybody. And you might be saying, you might be saying, why am, let me just lower this a little bit. Okay. That was a monster, a mash, a smash. So it's Halloween, and I thought I would be in a Halloween costume. And who am I? Well, yeah, that's right. I'm the manager to Rocky. I'm Mickey, and I thought I would be him today for the show. Okay, so that's my Halloween mask. Thank you. Okay, so let's put me back here, and we could shut off the music now. Okay, I hope you heard the monster smash through the speakers. You know, never know how this thing works, but so it's October 31st. It's Halloween, and let's get ready for. Okay, we're back. And so that was a little introduction. So what are we going to talk about today? We're going to talk about. Okay. All right. I'm going to shut off my. I just want to make sure the sound is good. So we will talk about down payment assistance programs. Now, last week we talked about mortgages and what not to do or what to avoid when you apply for a mortgage. And that's a great webinar because a lot of people during that 30-day to 45-day period, they will do some things that will hinder the closing. And one of those things might be, and which is most common, they'll buy a big ticket item, and especially they'll put it on credit like furniture, or they might buy a car. So that's last week's show. All my shows are on my blog site, so you could review them. So this week, we'll talk about down payment assistance programs. But before we do that, last week, Leonard was by Buckrow Beach for the farmers market. Today is actually the last day. And right now, it's sunny out, a little chilly. But if you can, go visit the Buckrow Farmers Market from 9 to 1 p.m. Leonard, can you hear me? Are you still out there?
Yes, Chris. I am back at Buckrow Beach and the Farmers Market for the last event of 2020. Please come and visit. It is open from 9 in the morning till 1 p.m. Get some fresh vegetables, coffee, refreshments and meals. Also, I want to wish everyone a happy and safe Halloween. Everyone looks wonderful in their costumes. Back in the Soviet Union, we wore masks and disguises not just on Halloween, but many times to avoid the KGB.
All right. I mean, sorry to hear that, about back in the former Soviet Union, but I'm glad that you just have to wear a mask. Well, I mean, a costume mask on Halloween here. You should all be wearing your facial mask during this COVID situation. Okay, I always bring that up. I took the hat off; it's warm. Okay, but again, I'm the manager, Mickey Faraki. That's my costume for Halloween. All right, so what are we actually going to talk about today? Let's get up our blackboard and let's see what we're going to discuss. We have the VHDA programs. We have and there are some grants to go along with that do not have to be paid back. And then there are grants for specific city locations. All right, so what we're going to do, let's go through it step by step. I'm going to give you a little bit of background information, and then we're going to look at a PDF file and see it live. So let's go to that. Let's go to VA loans, no down payment. Now, I wanted to add this because most, well, I don't want to say most military, but some military people, especially young people, just went in. Some are not aware of the VA loans. And these are loans backed by the government. And you do not have to put down the down payment. So, for instance, if a house is $150,000, you finance the full $150,000. You don't have to put down $8,000, $10,000, or whatever. You can if you want to lower your monthly payment, but you don't have to. And the other biggest plus with the VA loans, and again, this is for active members, and it's for veterans, those who retired from the service. Okay, and when I say retired, I don't mean that you're, in your 60s or whatever. If you put in your 10 years, whatever, or some going to 20, you're then eligible then for these VA loans. All right. So with that, if you are active or a veteran, it's great to take advantage of the VA loans because you don't have to do that down payment, nor do you have to get private mortgage insurance or mortgage insurance. And what is that? Well, if you're not putting down 20% or more of the purchase price of the property, you have to take out an additional insurance because when you are taking out, well, let me backtrack. When you are putting down less than the 20%, the bank is more at risk for that loan, okay? Because the more you have vested in the loan, the more money you put down, the safer it is for the bank. So if you're putting down less than 20%, there's something that's called private mortgage insurance that you have to pay. And that kicks in case you default on the loan, okay? So you have that, but with VA loans, there's no private mortgage insurance. Now, there is a funding fee from the VA that's built into the mortgage. However, if you are receiving any type of disability from the Veterans Administration, that gets cut down, and sometimes it gets cut down to zero. All right. And again, I want to say one more word on this, and it goes a little bit with what we were talking about last week and prior weeks on VA loans, is that you may be eligible. The VA might say, okay, you're eligible for a house up to $400,000. All right. And that's what they're guaranteeing. But that's not what per the bank you're eligible for. You still have to be pre-qualified and then pre-approved by the bank. The bank is the one that's actually giving you the money. The VA is insuring it. Okay. So many times when I speak to VA clients, they say, okay, I have eligibility for a $400,000 house. Let's look at that. No, you still have to be pre-qualified by the bank. The bank might say per your income, per your debt to income ratio, you could only afford, and I don't want to say only, but I mean, $200,000 is a lot, but you could get a house for $200,000, and that's what the bank is going to give you, even though the VA will guarantee more. So I just want to make that very clear, because that's always something that's a source of confusion when it comes to VA loan. So if you are active military or retired military and you're looking for a house, please consider the VA loan. Okay. Now, in Virginia, we have a nice program called VHDA. And what they do, and you have to be a first-time home buyer, and you have to be within a certain income limit. And they're pretty wide. It's not like you're making, you have a family of four making $20,000. It's actually pretty liberal. Okay. If I had a young man a few years ago. He was working in the shipyards. He was making about $38,000 a year, and it was just him going into the house or buying the house, and he was able to get the VHDA loan. So, and that for that person, that was quite a few years ago, and it may change. It might even have gotten higher because prices of homes have gone up. All right. So it's based upon income, but with this and with some other grants we're going to look at, it doesn't mean that you have to be making a low income. You could be making a decent salary and still get your down payment finance. So instead of, let's say we go with a FHA loan where you have to put down 3.5%. And so you're actually financing 96.5% of the loan. Okay. So what they're going to do is they'll finance 100% of the loan. All right. And now you don't have to put down a down payment. Now, there's a webinar that goes along with that. You have to take like an online class. You have to be, they don't just give it out to you. They want to make sure that you understand what you're doing, all right, what you are liable for. So now this is for first-time home buyers. But let's say you had a house and you sold it approximately, let's say 3 to 5 years ago, you are then considered a new home buyer. You can't use this VHDA program if you have two houses, right? Or you have one already. And even if you sold it, there's a time period that you have to wait before you could use it. But when we use the term new home buyer, that could also include people who have sold their homes 3 years ago. And you can't be on anybody else's mortgage. Let's say you're divorced, but you still own your husband or your wife's mortgage. You have to be off of any type of mortgage, okay, when you look at that. So that's a very good program, the VHDA program. But there are some grants that go along with VHDA and also Fannie Mae, which you have to put down 3%. And I'm going to show you some charts. But what I'm going to say is that this is not in stone. If you're going to buy a house through me, and I know you're a first-time home buyer, I'm going to bring you to loan offices that have these programs. But I'm going to let them explain what the requirements are in detail because they're the experts. I just know that these programs are out there, and I'll steer you to those loan officers that have them. I can't say that you automatically are eligible for that program. It's based upon income. It's based upon how many people will be living in the house. So there are requirements for each. And we're going to see that when I put the PDF file up. All right. And of course, grants, you don't have to pay them back. All right. There's sometimes some stipulations on it. I worked with one loan officer a couple of years ago their bank has now switched names. I don't know if they still have it, but they gave you, for instance, a first-time home buyer, they gave a $5,000 grant. But you would have to meet that requirement. So to get the whole $5,000, you may have to put down $1,000, right? You had to invest some money into the down payment. So you had to put some money for the down payment, but then they would give you a grant for $5,000. And you could either use it for the down payment or your closing costs, okay? So what they had is that that grant was being given to you in full in 4 years, but we're going to say 5 years just to make this example easy. So they gave you $5,000. So if you had the house and you stood in the house for the minimum of 5 years, you didn't have to pay that back. But let's say you moved after 3 years. There's a chance that they might ask for $2,000 back. So it's prorated. Now, each grant is different, okay? So again, you need to speak to the loan officer on that. Let's look at the other programs. And then there are grants for specific city locations. And I'm going to say city and a rural area. And many times these grants are to motivate people to purchase in areas that maybe are having economic difficulties and they want to build that up. So again, this is very specific. You have to speak to a loan officer on that. One loan officer who I spoke to with yesterday that I was going to do this live stream, he made me aware of, for instance, Newport News, specific areas of Newport News will give you grant money because they want people to purchase in that area to bring up the neighborhood. All right. There are parts, I think, in Portsmouth that are like that. Again, I'm leaving that to the loan officer to let you know exactly where those areas are. And then there are grants for rural areas. All right. So like here, that could be areas of Isle of Wight. It could be Gloucester. It could be going out really west in Suffolk. And again, the reasoning behind giving you those loans or giving you grants for the down payments is that they want people to go and purchase in those areas to build it up economically. Right. When I first came down here in 2007, we began to market properties in Carrollton, right over the James River Bridge. If you know this area, then that's part of Isle of Wight, and then it goes into Smithfield. In the 13 years that I've been down here now, that area, which was very rural, there was very little shops out there, right when you went over the water. Now it's condos all over the place. There are restaurants, there are strip malls. So it's a big change. Now, when I first came down, and maybe prior to that, in that part of Isle of Wight, they may have offered the USDA loans with money for your down payment. I don't know if that's a situation for that part right now because it's nicely built up, but there are other areas of Isle of Wight where it's still very rural, and they would like some economic development there. Okay, so let's take a look at our. Oh, by the way, I don't have my. Hold on for a second. Oh, I wanted this to be up here. Okay. Okay, that's my Halloween graphic. I wanted that to be at the beginning. There's so many things you could do with this program, but that's my Halloween graphic. I already had the hat, right, for Mickey from Rocky. All right, so this is my nice Halloween graphic. But actually, when I put up my PDF file, okay, and let's see if this is going to work. I mean, that's kind of small. I might put me down here. Oops. Excuse me. I'm down there behind the pumpkin. I might just get rid of the pumpkin right now so you can see that in full. Okay. So these are Virginia first-time home buyer programs. Okay. And by the way, I always have people call me actually from other states. A lot of times they're former students who, again, if you're not so sure of my background, I taught for 21 years in Brooklyn, New York, did real estate in the afternoon. But because of Facebook, I've kept in touch with many of my students, and they know I'm now into real estate full time, and they'll ask me about different programs. They're ready to buy a house. So these are specific to Virginia. A lot of times, with a lot of programs, they're specific by the state. So you would have to speak to a mortgage loan officer in your state to see what programs are out there. And the other thing I want to throw in, because Virginia is not that big on unions, but like a couple of my students, they became teachers, some became law officers, and they are within unions. And then many times you could speak to your union rep, and the union has programs to help their members to purchase a house. It could be, again, a down payment assistance program. And again, when I was there, it was these programs to, again, purchase in areas that needed economic development. So it's different for each state. Speak to your local. I mean, I'm going out through all the states. I'm actually being seen in England. That's why I'm calling it now the world famous Real Estate with Mr. G. Okay. But you have to speak to a loan officer in your state. This is for Virginia. So like we said, we have the VHDA down payment assistance program. Are you concerned about savings for your down payment? The Virginia Housing Development Authority offers down payment assistance for down payment and closing costs. So you could use it both for your down payment and or your closing costs. Now, with today's market, it's really a seller's market. We may not, and when I'm saying we as real estate agents, may not be able to get the seller to give you 3% of the purchase price for your closing costs. We might be able to get some, but you could very possibly get some of it then taken care of with these grants from them. So you have up to 2.5% of the purchase price in assistance for a down payment. Now, again, we talked about before about what is the eligibility. So here you need a 660 minimum credit score. It's not super high. Most loan officers for FHA programs say they could go to 580. There's going to be a lot of additional work upon that 580. They like to see at least 620, 640 to make it more of a slam dunk deal. But here, it's 660. You would need that to be able to be eligible for this down payment assistance program. I'm going to go over here to the Home Ready program. Fannie Mae conventional loan, which makes buying a home more affordable for first-time home buyers. That's a 3% down payment. And they also have down payment assistance available. Again, I spoke to two loan officers yesterday. There's a lot of criteria based upon that, upon you being eligible. So I'm going to leave it to them. I'm not going to go into specifics. You need to speak to them. They are the experts, and they will let you know if you're eligible for those down payment assistance programs. So here, this is kind of nice. So here you just need a 620 minimum credit score as opposed to the 660 minimum credit score. And they say they have a low mortgage insurance, which is good because you're putting down less than 20%. All right, and they have a 30-year loan fixed rate program. This Genoa down payment fund, I came across this during the week as I was going across or looking for different down payment assistance programs. I really am not. I haven't had experience with this program. Up to 3.5 assistance for a down payment and closing costs. Offered as a 10-year second mortgage. Entire state of Virginia eligible, so that's pretty good. 640 minimum credit score, home ready programs eligible, and lower mortgage insurance. Not bad. That's pretty good. Again, I have to speak to my loan officers. Not familiar with this program or have had experience with it. I've had experience with the other ones, but this one is actually pretty new to me. And again, these are the general type loans that are out here. FHA loans, the USD home loan. Again, if you're planning to purchase in a rural area or small town. And because of that, they're going to give you, in this situation, a 0 down payment, which is pretty nice. 600 minimum credit score. That's pretty good. Okay. When we look over here to the FHA, right here, you know, they will work with 580. They would rather work with, well, of course, they would rather work with a 700 credit score, but 580 is the lowest, and there might be a couple of bumps in the road to getting approved for it, but they're able to work with it. Okay. And with the VA loan, again, the VA loan is only for military, active, and retired, and 0 down payment, and they could work with a 550 minimum credit score. That's fantastic. All right, so we're going to go down. This is actually a flyer that one of my loan officers sent me yesterday. So they have Community Hero Grants 8,000. Excuse me. So here, the VHDA Community Heroes Grant programs help educators and first responders buy homes. So they're helping out the teachers, they're helping out the firemen, police officers get grants. And what's nice about it, it never has to be repaid. The income limits are substantially higher than most other grants. And I was looking at that. I was surprised how high they were. But basically, who is eligible for this program? Educators, loan officers, firefighters, first responders. This is a good program. It's for first-time purchase transaction only, no refinances. Eligible borrowers must have household incomes that fall within ranges listed on the following page. Must be used with the VHDA first mortgage products. Must work with a VHD lender that is approved to offer this limited time product. And by the way, that's the key word there. It's a limited time. And sometimes these grant programs run out of money. They're replenished every quarter. So let's say, for instance, you're looking to buy in January, apply for that grant then. By the end of February, March, there might not be enough money there. But then in most cases, it's replenished the next quarter. So let's look at the Norfolk VA Beach, Newport News. And for just one person, right, the minimum you have to make is $49,551, and the most $74,323. That's pretty big, okay, to apply for that. The funny thing about it, it's a grant. There might be some people who may not make this minimum, and that's usually strange for a grant because it's usually helping people with smaller incomes. But you have to make at least that, but not as much as $74,323. And then, as you have more people in your household, these numbers go up. All right. So here it's 56,651 for two people, and the maximum is 84,974. All right. So it goes up in that manner. And again, you have to speak to your mortgage loan officer on what works best, and basically if you are eligible, because I'm gonna put on my nice overlay again. Yay! Okay, I'm going to put that duty upon them to see if you're eligible. I'm going to make you aware of what's out there. And basically, let's say you call anyone by house and you're a teacher or your first responder. I said, hey, there's a great program you got to look into. And I'll bring you to that loan officer. But they have to see if you are eligible for it. Okay? So because there are different requirements. So we're actually going a little past 10:30 now. I was going to show a little Halloween video that I did about choosing a real estate agent. I'm happy if you're still with me now. I don't want to prolong it anymore, but let's say I hear Leonard calling me. I think we might have another famous person in our audience.
Chris, great news. We have two famous celebrities in the audience. They are circus entertainers and the sons of Ildebrando Zacchini, who came from a large Italian family residing primarily in Tampa, Florida. Although they were not the first men to perform the human cannonball act, nor the only, they quickly became well known for their doings. As well as being human cannonballs, the brothers were also wire walkers, tumblers, trapeze artists and riders. Throughout the years, they worked with various traveling circus companies including Ringling Brothers and Barnum and Bailey Circus. Their show was often referred to as the greatest show on earth and was considered to be a continental sensation. Ladies and gentlemen, the Flying Zacchinis.
Okay. Oh, what happened? That wasn't the whole file. Hold on. Let me just see fast if I can find it. Hold on. You could look at the nice graphic while I'm doing this. Let's see. I thought I had the tape of the Flying Zacchinis. I'll keep that for next week. Okay. So in the meantime, enjoy the Halloween. Enjoy Halloween. Happy Halloween to you and your children. Be safe. Wear your mask. So be socially distanced from each other, at least 6 feet. And we'll see you next week on the world famous Real Estate with Mr. G.